Gold prices on the decline today, despite other riskless assets finding better bids. We saw the decline midweek. We came in, or late last week, we came in. Gold prices were, pricing near 1325. We've seen a modest pullback since then. Nothing that I would call a sell-off, but certainly a decline in prices. It remains in a bullish formation as long as we stay and keep settlements north of 1300. But ultimately here, it's a bit of a surprise to gold prices reacting the way they are. Typically, in times of economic uncertainty, global geopolitical risks on the rise, we tend to see gold prices rally. We haven't seen that here. We saw gold prices rally up as high as, again, 1325. They pulled back. Today's selling, likely more speculators getting out with the idea that the unfolding of what could happen with Brexit, with China trade deals, whatever, possibly with a more of an upside there. We're watching gold speculators get out here waiting for the next catalyst moment, given that those other events don't seem to have the same risk flavor that they once had. So right now, from a technical perspective, still holding modest bullish momentum. We need to stay above 1300 to do that. We did on Wednesday. Likewise, we'll see what happens the rest of the week. If we look at the dollar, certainly the strength of the dollar today aided in the declining of gold prices as emerging market risks were on the rise. Likewise, I think that the dollar, it's finding favor against specific buckets, whether it be over in Europe or whatnot. And I think that even despite what we're seeing in the bond market, the rally in bonds that we've seen here over the past several days has been quite remarkable. And the fact that the Fed is now coming out and there's rate cuts priced into the market, and the uncertainty of the economy is certainly hanging over the market's head. It's a bit of a surprise to see a stronger dollar here, especially with 10-year Treasury yields below the effective funds rate. However, the dollar remains firm, at least it did today, and I think that's one of the reasons why we saw gold prices certainly not go sell off like it did, but certainly I think it prevented any sort of bid to gold, a dollar decline. So dollar stronger, gold lower, everything's working out fine. What do we have coming up later this week? We'll continue to watch China and U.S. negotiations. I think that right now that seems to be taking center stage as to how that will unfold. And while gold prices aren't necessarily a tit for tat with that, the risks that we see inherent in what could happen, you might see a bit of a bid to gold prices. Likewise with what's happening over in the UK with the Brexit vote, how that unfolds over the next several days with the Prime Minister likely stepping down shortly after in phase one of the Brexit. How will that unfold? And I think gold has always been there to be sort of an insurance policy, we'll call it, against risk assets, whether it be stocks, whether it be emerging markets. Gold buyers were there looking for ways to hedge their risk, and we just didn't see that today. And there is still some major risks going on in the world. As I mentioned earlier, there are Fed whispers that the Fed does not need to cut, and again, that's when we start to ask ourselves, why would they tell us that if they weren't, if there wasn't a cut that may be coming? Likewise, the yield curve in the U.S. is inverted. That is also a signal that a cut may be imminent. So I think that right now gold, not a very good barometer for today's trade, but from a macro perspective, I think gold buying will sustain and will continue, especially if the Fed is back in play to ease or quantitative ease, as the economy seems to be coming a bit apart. Growth will be a key part of that. The dollar will be a key part of that. But I think gold prices will ascend higher, if not because of what we're seeing overseas with the UK and the European economies. It'll do it because of domestic economies here. Likewise, equities remain very top heavy. We did see equities come off a bit today, but they remain very top heavy. Gold, again, would be a good hedge there for some modest declines in the equity market. So while we did see gold prices lower today and a stronger dollar, I do think that gold prices will continue to stay above 1300, in which case we will stay in that bullish momentum that we've seen here over the last, over the last several weeks.